Ladies and gentlemen, I'm back. So what you're looking at here is a volume profile indicator. As you can see on the chart, we have volume bars that represent how much volume was traded at different price levels. If you've ever traded using volume profiles before, then you already know that the longest volume bar, like this one right here, usually represents the point of control, also known as the PC. This is the price area where the highest concentration of buying or selling volume occurred within a specific look-back period. At the moment, the indicator is telling us that this zone marks the highest concentration of buying activity and it lines up with this Bitcoin price level. Over the last 200 candles, this is where the most buy orders were placed. If price comes back down and retests this level, I'm going to be looking for a long position. This is strong confluence because this zone doesn't just have the largest amount of buy volume, it also acts as a support here and resistance here. In other words, previous resistance has now turned into support. I'm combining three factors into one level: the former resistance, the current support, and the point of control showing the highest buy volume. That combination allows me to anticipate how price is likely to react when it comes back to this zone. As you can see, price starts moving lower. It hasn't reached the level yet, and then it finally taps into our zone and prints an engulfing candle. That's a strong signal that price may continue pushing higher. If I had taken a long trade at this point, you can clearly see that the trade would have ended up profitable. Now let's look at the opposite scenario. In this case, our volume profile shows that at this specific price level, we had the highest concentration of sell volume. Even see the exact price level marked. If price comes back up to this area, there's a strong chance it's going to move lower. Here again, we have previous support that has flipped into resistance. So once more, we're stacking three factors together. I take the prior support, combine it with the current resistance, and then add the PC line that represents the highest sell volume. When price comes back into this zone and shows a bearish continuation, specifically a clean engulfing candle, I'm going to look for a short entry. A few hours later, price reaches the level, gets rejected, and prints that engulfing candle. Enter a short position, and as you can see, after some time passes, the trade becomes profitable with roughly a 1 to 1.5 risk to reward ratio. Ladies and gentlemen, this video is all about one of the most powerful and unique volume profile indicators I've personally seen on TradingView. We're going to break down exactly what this indicator is, the best settings to use, and I'll also walk you through a sample strategy that's optimized for profitability. If you're getting value from this video, make sure to leave a like, and even better, consider subscribing to the channel. Stick around and let's dive in. To get started with this indicator, the first thing you need to do is head over to TradingView, which is the platform I'm using like always. If you don't already have an account, there will be a link in the video description for you to sign up. Once you're in, open any market you want on any time frame. In my case, I'm going to use Bitcoin on the 1 hour time frame, which is my sweet spot. Next, click on the Indicators tab and search for Quadro Volume Profile. Then select this one by my favorite, Big Beluga. Once you add it to your chart, this is what's going to look like. The Quadro Volume Profile is a precision-built volume analysis tool that divides market volume into 4 distinct quadrants around the current price. By separating bullish and bearish volume both above and below price, It allows you to quickly spot where market participation is strongest and where highest interest price zones exist. Now let's break down its actual components. This green horizontal line represents the current price of whatever market you're analyzing. The white vertical line splits buy volume from sell volume. That current price line also acts as a divider, separating volume above price from volume below price. When you combine those two lines, you end up with 4 volume quadrants around the current price, hence the name quadrant volume profile. Now let's talk about the volume bars themselves. They're divided into 4 sections for a reason. Starting from the top left, we have the sell quadrant above price, which represents a bearish volume above the current price. On the top right, you'll see the buy quadrant above price, which shows bullish volume above the current price, of course. Below the price, the lower left quadrant displays buy volume below price, meaning bullish activity underneath the current price. And finally, the lower right quadrant shows, of course, sell volume below price, which represents bearish activity beneath the current price. Each quadrant comes with a live label, so you never have to guess. Red indicates a selling volume, and guess what? Green indicates buying volume. These labels also display the total volume within each quadrant along with its percentage of overall trading activity. When you add all 4 percentages together, you get 100%. This is important because as traders, we want our setups to form in areas with the highest market interest. You'll also notice dotted lines on the chart called points of control or PCs. Each PC marks the price level with the highest volume in its respective quadrant. For example, the green PC above a price comes from the longest buy bar in the upper buy quadrant, while the red PC above price comes from the longest sell bar in the upper sell quadrant. The same concept applies to the quadrants below price. If you want to track a specific level, simply draw a horizontal line on that bar and extend it to the right so you can monitor how price reacts. A buy-side PC near a support level often becomes an area to watch for long trades, while a sell-side PC near resistance can highlight potential short opportunities. You might be wondering, why use 4 quadrants instead of a traditional single volume profile? The reason is simple. By separating bullish and bearish volume both above and below price, this indicator makes it much easier to see where real market interest is actually concentrated. With the default 200 candles look back, you can instantly see how buy and sell volume is distributed above and below price. If you're trying to identify the strongest level, just find the longest bar in the relevant quadrant and use its PC. The result is clean, uncluttered chart that makes execution much simpler. Now let's jump into the settings and see how customizable this indicator really is. Under the Inputs tab, the first setting you'll see is the calculation period, which defaults to 200. This defines how many historical candles are used to calculate the volume data. I'm not going to change this value. Next, we have the bin setting. This controls how detailed the volume distribution is and how wide each volume bar appears. Fewer bins mean thicker bars and cover more price levels. When dealing with volume, we usually don't focus on a single exact price. Instead, we think in terms of zones, just like drawing support and resistance as areas rather than thin lines. Lower bin values cover more price points per bar, which I personally find more useful. That said, you don't want to go too low. If you increase the bin count, the bars become thinner and represent fewer price levels, which isn't ideal for my style. I'm gonna set it to 35. Next is the offset setting, which determines how far forward the volume profile is pushed on the chart. The default is fine, but for this strategy, I'm going to change it to 75. Below that, you'll find toggles for each quadrant. Clicking on any of these allows you to turn the specific quadrants on or off. The toggles on the other side control whether the PCs for each quadrant are displayed. If you don't want a particular PC on your chart, simply uncheck it and it will disappear. You can also customize the colors here. The calculated bar setting limits how many candles the script initially processes, which can help improve performance on slower machines. If your computer is fast, you can leave it at 500 or even set it to 0 so the script runs on all available data. The Style tab, you'll find additional visual options that you can adjust to your preference. I've already made my changes, so once you're done, click OK and we move on to how to actually trade with this indicator. To trade this strategy properly, we also need a trend indicator to help confirm market direction, especially when trend lines alone become subjective. To add it, go back to indicator search bar and type in variable index dynamic average, again by Big Beluga. Big shout out to them, by the way. Once it's added, double click it to open the settings. Under inputs, change the VDA length to 50. Then go to the color settings and disable the shadow. In the Style tab, turn off every option except the first plot and increase the thickness of the line. Once that's done, click OK. This indicator, commonly referred to as VDA, will act as our trend filter. We only want to trade in the direction of the trend. When the line is green and price is trading above it, that tells us the market is bullish and we should only be looking for long setups. When the line turns red and price is below it, the trend is bearish and we'll only look for short opportunities. So how do we enter a long trade? First, we confirm that the trend is bullish, green VDA line with the price above it. Second, look for a lower buy quadrant PC that's located near a previous major support level. On the chart, you'll notice two horizontal lines, a red one above price and a green one below. That green line represents the PC from the lower buy quadrant. This PC should align closely with the recent support level, which in this case is right here. I'll mark this area with a rectangle so we can watch how price reacts when it comes back. Next, we check the volume percentages. Since we're relying on buy-side volume, we want the buy percentage to be higher than the sell percentage. As you can see, that condition is met. Now we wait. Price pulls back, taps into our zone, and then we'll look for bullish continuation, ideally an engulfing candle. And right here, we get a beautiful engulfing candle, which is our signal to enter a long trade. The stop loss goes safely below the zone, and the take profit is set at 1.5 times the risk. We'll let the trade play out. And for short trades, the process ends in reversed. First, confirm a bearish trend with the red VDA line and price trading below it. Second, identify a red PC above price and represents the highest selling volume over the last 200 candles. Make sure that PC is located at or near a major resistance level. It doesn't have to be exact. Close is good enough. In this example, we even get an extra layer of confluence because this resistance level also acted as prior support. I'll mark the zone so we can observe price action during the retest. Since we're selling, also want to confirm that sell volume dominates buy volume in the percentages. As you can see, the condition is satisfied. After several hours, price retests the resistance backed by volume, a strong double confluence. We then wait for a bearish continuation, ideally another engulfing candle. We get a clean rejection and a solid engulfing candle, so enter a short trade. The stop loss goes above the level, the take profit is set at 1.5 times your risk, and we'll let the trade run. Even though it takes some time on the 1 hour time frame, the trade eventually becomes profitable. Keep in mind, the goal of this strategy is layered confluence. Not all PCs carry the same weight. You want to focus on the ones that align with key market structure, support, resistance, range highs and lows, and prior swing points. A lower PC sitting right on the well-established support level is far more meaningful than a random PC floating in the middle of nowhere. To wrap things up, the quadrant volume profile gives you a much cleaner way to interpret the volume as both intention and location. Instead of a single blended histogram, you get 4 targeted volume readings that show exactly where buyers and sellers were active relative to current price. You can see how strong that activity was where the real battle took place. This makes it easier to evaluate breakouts, identify absorptions, and understand why certain ranges hold or fail. And of course, this is not a financial advice though. Everything in this video is for educational purposes only. Successful trading requires a complete plan that matches your own risk tolerance. Always add your own price action confirmations and double-check your thesis before entering any trade. If you found this video helpful, leave a like and don't forget to subscribe. Thanks for watching, and I'll see you in the next one.